We're gonna be so rich. We're gonna be so rich. We're gonna be so rich.
I want
so
my fucking
so goddamn
money.
rich. We're gonna be so rich. We're gonna be so rich. We're gonna be so rich. So goddamn rich. Get that money printer. Yelling. Yeah. Get that money printer. Kenny. Ha. Get that money printer. Jay. Powell.
What?
Get that money printer. Yeah. Jenny yelling, never telling, but she always
thought you
fucking
brought
selling.
pizza, bro.
Yes, she don't wanna see us, let her alone. Free us, Powell, acting foul, time to throw in the towel. Dark money, bringing power, reverse repo by the hour. 100 bands, 2 tickers, plenty booms, plenty strippers.
Fuck, there's no more buffets.
I am the
What the
butcher, I am the
fuck,
sticker.
dude?
In increments through the late exchange, I am the butcher, bringing the pain. When it's over, please remember the name. Like a ran through life, you're not walking the same. Damn. We're gonna be so rich. We're gonna be so rich. We're gonna be so rich. So goddamn rich. We're gonna be so rich. We're gonna be so rich. We're gonna be so rich. So goddamn rich. Get that money printer. Yelling. Yeah. Get that money printer. Kenny. Ha. Get that money printer. Jay. Powell. Get that money printer. Yeah. Go get my shit, man. I'm not playing with you motherfuckers. Go get my motherfucking money.
There we go. What's up, Ape Nation?
Some of them shorts, stop
What's up, retail investors? How we doing today?
I know you gotta do this for midterms. We know what's up.
Big shout out to Phil For Real for that awesome video and the song. Everybody, I'm Marcel Kalinovic, Butcher Wall Street. This is going to be a fast one. We're going to get right into it. Here's what's going on. Thanks to Roy Jenkins here on Twitter for some of this information. We've got a lot of people that have been working together in the retail investor community and have come up with some incredibly good details on FTX and why the token securities on FTX and BitREX basically are the equivalent of billions of synthetic shares. Here's what's going on. CM Equity is required to hold 400 million shares of AMC to back the tokenized stock. The problem is there's only 513 million shares of AMC on the float. And that being said, retail owns 85% of them. We already know this because it's been proven to us via share counts by AMC that Adam Aaron and AMC have done multiple times. I think they've done 3 share counts so far, and it's come to light that there are over 4 million people invested in AMC, and we own over 85% of the 513 million share float. But if we have 85% of the 513 million shares, and then institutions own another 28% of that, and then ETFs own another 5% of that, and the short interest is another 20% of that, where do these 400 million shares come from? For those of you that don't understand, what are tokenized stocks? Tokenized stocks are equities that are traded on traditional regulated exchanges. I'm sorry. Equities are stocks that are traded on traditional regulated exchanges. FTX tokenized stocks are select equities. These spot tokens are backed by shares of the underlying asset, and that underlying asset in this case is AMC. They are custodied by CM Equity. They can be redeemed by CM Equity for the underlying shares if desired. CM Equity needs to have shares to back each token with a 1-to-1 ratio. 400 million AMC tokens are currently in existence with a market cap of $15.176 billion. How is CM Equity currently in possession of 400 million shares if we own 85% of the 513 million shares? By that logic, there would only be 113 million shares left on the market, not including short interest, not including institutions, not including exchange-traded funds. Can you say synthetic shares? CM Equity is a fully regulated company in Germany, and they're a licensed financial institution permitted to offer these products. FTX users who trade tokenized stocks may have also become customers of CM Equity as a pass-through compliance, basically. All trading activity is monitored by them, and they're custodies of these equities at a third-party brokerage firm. CM Equity provides the brokerage services. Yet they provide, their order execution doesn't really make any sense. And what I'm getting at is that I don't really think they ever owned these 400 million shares. Just in the same way that Sam Bankman-Fried has been, basically showing the fact that these companies are completely bankrupt, and we'll get to that here shortly. It's the same thing here. Like, they never owned these assets. They're just printing money out of thin air and saying that they owned them. One of the most important points is that depending on the exchange, tokenized stock may or may not have collateral behind it. However, in this case, the tokenized stock without collateral is a synthetic security that the crypto exchange or intermediary writes into existence on a blockchain somewhere without actually owning it. Moving on. Yesterday at close, AMC average cost to borrow is 157%. Their maximum cost to borrow was 344.82%. There was an increase of 400,000. There was 400,000 returned shares, 2.4 million borrowed for a borrow change of 2 million additional shares. Even still, that happened yesterday. AMC went up 19.9%. Bitrex launched GME trading of their tokenized shares. I'm talking GameStop here for a moment, but still, they also launched AMC tokenized shares and many others on January 28th, 2021. Look at this date. This is the date that they introduced it. It was the date that broker-dealers pulled the buy button. They needed to do this in order to create synthetics to give them something to buy. This allowed them to reduce the price. Meanwhile, retail investors could not buy or sell any of them. They could not buy any more GameStop, AMC, or COS because those three tickers were pulled from their, basically the buy button was pulled away from them, allowing them to only hold or sell. A lot of people freaked out. Some people sold. They paper-handed like bitches. Some people made a lot of money, and then they bought back in. Some people made a lot of money and never came back. However, based on the numbers and the on-balance volume, it seems that the majority of people never fucking sold. They continue to hold because they know that this is a bunch of bullshit. This right here on January 28th, 2021, being the date that Bitrex allowed people to buy, sell, and trade GameStop via their tokenized securities with no actual collateral behind them, is literally a derivatives market in crypto that doesn't have any collateral behind it, even though they're supposed to. These are Sam Bankman-Fried's investments. All of these companies here, from 3 Commas all the way through Embed Financial, BlockFi, Ledger Prime, all the way down to Yuga Labs, are investments and acquisitions owned by Alameda, FTX, FTX US, and FTX Ventures. And as of today, 134 of FTX's firms filed for bankruptcy. All of the Alamedas here, B Payments, BitPesa, Block Holdings, Blue Ridge, Cardinal, etc., etc. CM Equity AG. See these assholes right here? CM Equity AG. These are the same assholes that we were just talking about that are supposed to hold these shares of GameStop and AMC in their tokenized stock. That being the case, as you can see, there are many of them, FTX, Ledger Prime, etc., etc. 134 companies are now bankrupt. This equates $50 billion. $50 billion in the stock market, okay, that is being wiped out, if not more. That is much bigger than Lehman Brothers. Lehman Brothers was around $25 billion, I believe, $23 billion, and FTX is more than double that. FTX is way more than double that now. Excuse me here 1 second. Make sure you guys can all hear me. Okay, very good. All right, moving on. Aside from the 400 million shares on FTX, excuse me here. Make sure I give you the right one. 410 on FTX. Bitrex has 615 million more shares of AMC, or at least they're supposed to. So if there's only supposed to be 513 million shares of AMC, retail owns 85% of those, institutions own 28% of those, short interest in 20% of that, ETFs own another 5% of that. Where do these 410 plus 615 million shares? That's over 1 billion shares of AMC that are supposed to be backing these tokenized stock. 615 million on Bitrex, 410 million on FTX. Tell me again it's impossible for synthetic shares to exist, Charlie Gasparino. You're a fucking moron. As you can see here, the total supply of AMC on Bitrex is 625,383,604, but only 513 million exist, of which we own 85%. As you can see here, Bitrex globally new listed stocks were GameStop, AMC, BlackBerry, Nokia, and SLV, iShares Silver's Trust. What does that tell you guys? They're printing money, and they never owned the collateral to begin with. Therefore, they owe a lot of money, 50 billion plus, to a lot of different companies, prime brokers, banks, and investors around the world. This is going to be a cascading effect of domino effect, cascading effect of margin calls and bankruptcies, ladies and gentlemen. Crypto exchanges, equities markets like stocks and such are going to explode, and they're going to collapse. And you're going to have stocks that have had shares sold, not yet purchased. Well, they're going to have to go and fetch them at whatever price. Now, BlockFi, in my opinion, is the next on the chopping block. They said yesterday, "We are shocked and dismayed by the news regarding FTX and Alameda. Given the lack of clarity, we are not able to operate business as usual. Until there is further clarity, we are limiting platform activity, including pausing client withdrawals as allowed and under our terms. We will share more specifics as soon as possible. We request that clients not deposit to BlockFi wallet or interest accounts. We intend to communicate frequently, but anticipate that this will be less frequent less frequent than what our clients and other stakeholders are used to, because they're going fucking bankrupt too." I'm not a financial advisor, and none of this is financial advice. Now, I don't actually believe that FTX owns these 400 million shares. I don't believe that BitREX owns the 615 million shares that they say they're supposed to own. That's over 1 billion shares, when only 513 million exist. But they had no choice but to create these tokenized securities in order to prevent the price of these stocks from exploding and getting out of control. There's a lot of information here about FTX and Sam Bankman-Fried, and there's allegations that he was involved in money laundering, theft, fraud, and violations of federal and state securities laws. And this gentleman filed with the SEC on September 10th of 2021, claiming that the SEC is not listening to his complaints about Sam Bankman-Fried. Meanwhile, they're meeting with SBF and discussing getting FTX regulations. I won't really go into this too much, but they allege that FTX and Sam Bankman-Fried was involved in money laundering, theft, fraud, and violations of federal and state laws. They had a cover protocol of $100 million theft goes. They never listed the real names on any of the projects. Sam and his lawyer, Dan, gave this gentleman the cover protocol team information he has, but they refused. Every crypto company should be okay, moving on. They have this $100 million safe token cover protocol investor theft of SBF, Sam Bankman-Fried. Well, he was an advisor. This guy stated that he lost hundreds of thousands in safe token profits because of the rug pull theft. He was able to settle for 1 Bitcoin. And he said, what really bothers me is the only way Sam, SBF, and FTX would settle is if they controlled the settlement narrative, wherein the FTX lawyer had him sign an employment contract for 30 days. And instead of a settlement NDA, they paid him 1 Bitcoin, and they never hired him to do anything within 30 days. Therefore, they filed a lawsuit that was settled out of court with the plaintiff, but FTX and SBF once again controlled the lawsuit settlement narrative, paid the plaintiff out of court, then published posts that stated the lawsuit was frivolous and thrown out of court, which it was not. FTX and Sam Bankman-Fried is and were involved in money laundering, theft, fraud, and violations of federal and state laws. Now, I have to say that these are only allegations, and I have no proof of this for my own, legal well-being here. But as far as the cover protocol, $100 million theft goes, they never listed their real names on any of the projects. They refused to basically do anything. Long story short, these guys have a long history. Well, looks like I lost my place on this one, but it doesn't really matter because you guys know we're talking financial runs, baby. We're going to be so motherfucking rich. Billions of fake shares just on these 2 exchanges, FTX and BitREX. Or shares that were sold, not yet purchased. That's even more dangerous. As you can see here, huge shout out to RatToy2 on Twitter for finding this one here from BitREX. And Ape Average as well. Huge shout out to my friend here. He's got some pretty bullish charts looking at Bitcoin collapsing just like it did previously when AMC and GameStop ran hard. Look at what happened the last time. Collapse, run, collapse, run, collapse. And now what happened with Bitcoin? Well, we all know what's happened with it over the last few days. It went under 16,000 and is currently being held in the 16,000 range right now, for now. That's not going to last long, especially as these crypto exchange bankruptcies get pushed further and further out. Now, that being said, big shout out to Janjack said, there's no doubt that these tokenized securities are nothing but the securities sold, not yet purchased, or uncleared FTDs, which showed up on brokers' books. These are liabilities, aka debts, that market makers move out of the stock market into unregulated crypto derivatives. What do you guys know about CDOs? Remember that from The Big Short, 2008? They never left. Nothing has changed. 2008 can just got kicked, and they're about to pay the fucking piper. And that's why we're going to be so fucking rich. The definition of a CDO is a debt security collateralized by a number of debt obligations, including loans and bonds of different credit quality and maturity. What does this mean? Well, the tokenized stock's value, according to BitREX Global, is based on the collateralized with the underlying asset. In this case, AMC, GameStop, etc. A traditional security and the value of the digital asset is determined by the value of the traditional security, hence the share price, ladies and gentlemen. They are collateralized by an equivalent notional amount of the traditional security, i.e., $100 of debt derivative would be collateralized with $100 of the traditional token security. One token would equal one share. How are they going to come up with 1 billion shares when only 513 million exist? This is the same thing we saw with the Brazilian depository receipts. And what's worse, people don't realize that American depository receipts are absolutely ripe with corruption. There is more criminality happening with American depository receipts being held overseas than there is with anything else. And those are all hidden because the CFTC does not follow Dodd-Frank regulations. So everything that Dodd-Frank did means absolute jack shit because they're just using ADRs, BDRs from Brazil and America and all other countries, German depository receipts, etc. These tokenized stocks and cryptocurrency to create synthetic shares to beat the stock price down without actually owning them. Tokenized stocks may also include leverage as well as long or short exposure, according to Bitrex. Here is the Citadel Securities Statement of Financial Condition. This is expressed in millions of dollars. Therefore, this security sold, not yet purchased, at fair value, using fair value accounting, not actual value accounting, is $65,703 million. But in reality, fair value accounting doesn't mean shit on the open market. The price keeps going up. Fair value accounting goes out the window. They got to pay whatever the fucking share price is. And they no longer have these bullshit money, printed money, these fake shares to play with anymore. Now here's Virtue Financial. Their financial instrument sold, not yet purchased, was $3,510,779,000, which was an increase of over $600 million from the year prior. And that was on December 31st, 2021. God only knows what it is now. Huge shout out to Jan Jack AMC, in case I didn't say that. BlockFi is next on the butcher's block, in my opinion, ladies and gentlemen. Tether is not far off. Solana likely as well, and many of these other investments. Then he said unto Felicia, make haste with thy departure, because I want my fucking money. This being the case, AMC average cost to borrow a couple days ago was at 128%. Average cost to borrow, not maximum. The maximum was 314.63%. We saw a 19.9% gain yesterday at the highest level of AMC. 19.9%. Granted, it's only a couple bucks, or it was, a little over $1, but that's not the point here. And I'll explain why in a moment. The point is that yesterday it ran 19.9%, and today it ran 15.82% at the end of the day. As you can see now, it's getting shorted here towards the end of the day. You can see the short candles. 1, 2, 3, 4 right there in the after hours. After a 15.82% run, I highly doubt, looking at the on-balance volume, that retail is selling any of this shit. As you can see here from my position, I have just under 8,000 shares of AMC in this one broker alone, not including my ape shares, not including my other brokers, not including my... I have multiple brokers, not including my actual six-figure shares worth in contracts that I own on AMC1. AMC1, the derivatives basket, is basically 100 shares of APE and 100 shares of AMC. And I'm very much looking forward to selling some of those for a big, big profit, just like I did when my $40 calls back in June of 2021 went from $23 a piece basically to $6,000 per contract. Made a lot of money, and I expect to make even more this time. And I'm not talking millions. I'm not talking hundreds of millions. I'm here for billions with an S. And here's the perfect screenshot, thanks to Ludikai, to remind everyone that these days will come again. What happened here? Well, let's see. We had 10% run, 20% run, 15% run, shorting, 15% run, 20%, 25%, 10% run, 8% run. And then you started to see the big boys. 45% runs, 35% runs, 100% runs, 115% runs, etc. Heavy shorting, and more and more and more until we got up to, this was at $69 a share. Fucking primo. Thanks for taking this screenshot, my friend. And I think it's only a matter of time before we get right back up there. Now, I think that says enough about synthetic shares. I can go on and on and on, and I can keep fucking talking about this, but I'm not gonna. The next thing I'm gonna say is about DRS. Now, Adam Aaron did specifically mention direct registration of shares, and he said that retail has the right to do so. But he did not say, nor did he imply, that retail should or should not do it. Doing my own due diligence, I've come, and as well as my friends in the think tank, in Boss Blunt's think tank, we've come up with the fact that with the knowledge that the DTCC owns the DTC, which obtains the transfer from ComputerShare. Then the DTC sends them to the brokers for the other instruments for distribution. Noted here, DTC introduced a FAST system, which is an electronic custody transfer and deposit. These accounts are registered as seed and company. If you don't know about seed and company, you've got a lot of homework to do. And they represent on the transfer agent's books the sum total of shares that are issued that are held by these DTC's participants. Participants maintain corresponding books representing their shareholder accounts held in street name. DTC's deposit withdrawal at custodian program is used to transfer shares from the issuer to broker accounts from company holdings. DRS is operated through the DTC. They were established in the FAST system in 96, and it enables shares to be held on records of transfer agents in book entry form. The DRS also enables shares to be transferred electronically between transfer agents and participants. This means that it can be borrowed and transferred between the transfer agents and the participants. Transfer shares to street name from a transfer agent account, or they can transfer shares to a transfer agent account from the street name. In addition, the FINRA they fixed the ex-dividend date, normally 2 business before the dividend record date. The transfer agents act as an issuer's paying agent for the dividends. The transfer agent disperses dividends to registered shareholders either by electronic funds transfer or check. If they disperse the dividend electronically to the DTC, which in turn forward the funds electronically to the brokers or other financial intermediaries for distribution to the beneficial shareholders. If it is a stock rather than a cash dividend, the transfer agent will generally issue shares in book entry form and send statements to the shareholders. This is the way that it works between institutional investors and retail investors. There's brokers, clearinghouses, the NSCC, the DTC, the market makers, and the exchanges. And the shares can be moved back and forth here in between them. Once the shares are held by the DTCC or the DTCs, forgive me if I misspoke there, through DRS, that they can then be moved, and not moved, but they can be lent to anybody that the DTC wants through these systems that we just got done discussing. These are investors send orders to broker-dealers to buy or sell securities. The broker-dealers send the order for execution to an exchange or to a marketplace. The trade is made with another broker-dealer or specialist on these exchanges. The trade information is sent by the exchange or marketplace to the NSCC for post-trade processing. The NSCC processes and records trades, issues to broker-dealers a summary of all compared or recorded trades, including information on net securities positions and net money to be settled. Then the NSCC sends instructions to the DTC with net security positions to be settled. As deliveries are processed, net money to be settled is posted to their settlement system. The DTC transfers ownership of securities electronically, moving net securities positions from the selling broker's account to the NSCCs, and then from the NSCs to the buying brokers. Broker-dealers end up settling with banks, sending or receiving funds to the DTC to complete the settlement, at which time all securities movement become final. So these shares bounce around like there's no tomorrow. These are the daily total U.S. Treasury failures to deliver. Yes, you heard that right. The United States Treasury fails to fucking deliver. Here's another retail investor trade settlement flow of shares moving between the selling broker-dealer, buying broker-dealer, NSCC, and the DTC, and the way that they could be transferred over between them and borrowed amongst each other between the banks. Again, more here. More of the same. Okay, and multilateral netting, bilateral netting, this is the biggest problem that we have going on right now with the markets. When one of the counterparties does not fulfill its settlement obligations by delivering the required securities, a failure to deliver occurs in CNS, continuous net settlement. You may have heard guys like AMC Bigums or myself talk about this before. Failures to deliver may be caused by the NSCC member failure to receive securities from a customer or counterparty to a previous transaction. While NSCC provides final settlement instructions to his members each day, the payment and transfer of securities ownership occurs at DTC. This is an article from June 16th of 2015. Thank you again, Edward Britchuk. Make sure you guys check him out on Twitter. Illegal naked short selling appears to lie at the heart of an extensive stock manipulation scheme. This is not something new. We did not come up with this. Nobody made this up. This is the problem. The system has failed us, according to Sean Wenzel, who made these badass graphics. And he's not lying. You know what I like to say? I like to say, if buying and holding breaks the system, then the system was broken in the first place. I didn't even click that, but there we go. We're live now. So we are live, ladies and gentlemen. Thank you so much for joining us. Now that we've talked about why I'll never DRS my shares, why I think it's a terrible idea, I haven't even touched on the fact that ComputerShare has a max cap on DRS. I haven't touched on a lot of those things. But here, you know what? I will just pull that up for you real quick, just in case you guys are wondering. In addition, DRS is a waste of time because there's a certain thing called short exempt. Shares can be sold short, exempt, by market makers in the name of liquidity at any moment. So direct registering your shares really doesn't do anything except for lock up your shares inside the DTC and allow them to use them for whatever the fuck they want. Plain and simple. I don't need DRS to win. Hedgies are fucked. That's all I got to say about that. In addition, for those of you that are unaware, DRS, not ComputerShare, DRS has made it so they've removed their $200,000 limit on the sale price of securities, and they've max capped it at $3,000 a share. So if AMC or GameStop run to $5,000, $10,000, $50,000 a share, I don't fucking know. Those shares will only be sold at $3,000 a share. It sounds pretty shitty to me. That being said, take a look at this. Huge shout out to Gordon Johnson over here for posting this one up, because he says, what if I told you that CPI surprise yesterday was partially due to periodic adjustment that won't be reflected in the Fed favored core PCE that comes out right ahead of the December Fed FOMC meeting, the Fed meeting? Well, that's just what happened. This is the CPI for health insurance. It didn't go down, but look at it. You see this chart? It accounts for almost 1% of the overall CPI and 1.1% of the core CPI. Due to a periodic adjustment, it plunged 4% in October to September, or an aggregate of a 6.1% swing from September's 2.1% figure. This was by far the largest month-over-month fall in the Bureau of Labor Statistics data, going all the way back to 2025. And if you're a follower of this channel, a retail investor who's been following us for a while, you know that we've been talking about this since 2021. We all know that healthcare costs have not fucking collapsed. They have not gone down this month from last. In fact, if healthcare costs stayed constant, October CPI would have been 5 basis points higher than it actually was. So it wouldn't have been 7.7. It would have been like 8.2, 8.3, which is terrible because it's over a 12-month trailing period, 12 trailing months, the 12 most recent months. Inflation hasn't gone down, ladies and gentlemen. These numbers are just skewed to make people like you and I think that inflation is starting to go down and it has peaked. Now, as a matter of fact, there's a guy that I like a lot by the name of Economic Ninja, and I've got to reach out to him on YouTube because he's absolutely wrong in the way that he stated that inflation has peaked. And the only reason I say that is because it's clear. Healthcare cost adjustments helped services, excluding energy, with the CPI, but it still jumped 6.7% year over year, which is unchanged from the month and the worst since August of 1982. And with energy inflation in October, CPI data is taking off again, creating a further rise. You will see hyperinflation, ladies and gentlemen. You haven't seen anything yet. You haven't seen anything. And I hate to say that. I hate to sound like a fearmonger, but I'm a realist, and I will always keep it fucking real. They don't call me Boss Blunts because I just like to smoke blunts. It's because I keep it blunt all the fucking time. There's been a whopping 1.8% month-over-month gas price increase, and 4% month-over-month, and 17.5% month-over-month, year-over-year gas price increase. I showed you that earlier, that certain companies have increased their gas, coal, and electricity prices by over 100%. 100%. Let me go over to Lit Exchange. We've got this awesome article that was posted by Lit Exchange. Writes... Sorry, I've been tweeting a lot. Things have been pretty crazy. Right here. Electricity, coal, and gas increased 100% in the last 9 months. The company LMP in the first 9 months of 2022 increased 118% from $35 per megawatt hour to $77 per megawatt hour. Sorry. This was the highest average PJM price, the highest price increase, and the highest percent price increase since the creation of PJM markets. Coal and natural gas prices rose year on year. Coal and gas prices doubled in the East Coast, covered by PJM. What do you think is going to happen, ladies and gentlemen? Inflation is not at 7.7%. It's much higher. But there was a blip in the data from the Bureau of Labor Statistics in that healthcare costs that I just told you about. That made it inflect downward. So it is all bullshit. It's all lies. Inflation has not peaked. It is not coming down. It's actually continued to stay stagnant. The Fed will not pivot. FTX, 134 subsidiaries of FTX are now bankrupt. This is a lot worse than Luna. This is a lot worse than Lehman Brothers. Lehman Brothers had $23 billion worth. $23 billion worth of securities and equities liabilities. And what you're seeing now is $50 billion worth of liabilities via FTX. That being said, make sure you're properly hedged. I like precious metals. I like my favorite meme stocks. I like tangible assets. I like cash on hand because cash is important. I like having food stored and stocked up, lots of it, because supply chain issues are rampant and they're only going to get worse. On that note, if you guys are looking for a broker-dealer in the near future, I expect to be releasing a broker-dealer by the name of Lit Exchange, and we're going to compete with the likes of Robinhood and Webull, Fidelity, and so on. Because I think it's very imperative that retail investors find a better option. Find a better option with actual transparency that has their best interest in mind, unlike FTX. That being said, I wish you peace and wealth. Have a great day. If you want to learn more about Lit Exchange, you can go to www.litexchange.app, litexchange.app. And I'll just show that to you guys real quick here if you want, just so you can get a good quick peek at it. You can follow us on Twitter as well, Lit Exchange LLC. We've got about 1,800 followers so far. It's a new Twitter account. And we expect to route 100% of orders direct to lit markets unless customers want them routed to other markets. We're here to empower retail investors and positively impact price discovery and market equality. We need more transparency, better price improvement, and the highest quality user interfaces, charts, and educational tools for retail investors. I know what I want. I know what other people in retail want because I've asked them. And it seems none of these broker-dealers have actually done that thus far. They just give you the shitty products that they have, and they run everything through fucking dark pools and payment for order flow. There was a fine done by the SEC against Robinhood in 2020, before this GameStop and AMC and Cost debacle, where they pulled the buy button. And basically, they fined Robinhood $65 million because they defrauded retail investors. And even accounting for their commission-free trades, retail investors lost $34,100,000 more, even accounting for these commission-free trades. There's no such thing as commission-free. You still pay for it via payment for order flow. They just roll it into the total price. So you have no fucking clue how much you're paying in commissions. The difference is, I'll charge you a commission. Yeah, Lit Exchange will charge you a commission. But at least you'll know what the fuck you're paying and what you're getting in return with proper price execution. That being said, you can feel free to sign up for a beta testing. We have not opened it up for beta testing yet. Once we've received proper approvals from FINRA, we will put it out for beta testing, and only the first 15,000 applicants will be contacted to apply to become beta testers. We will never share, sell, or give away your information with anybody. I did not come and start doing YouTube or Twitter or any of this stuff or Twitch in order to get people to join my company or to join the soon-to-be broker-dealer. I came here because I love AMC and GameStop, and I've been a retail investor my whole life. I've been trading for over 20 years, and it's gotten to the point where I said enough's enough. Fuck Robinhood. Fuck Webull. Why are we trading with these companies that send everything through dark pools, that are based out of China, that launder money and commit fraud and sell tokenized securities with these collateralized assets that don't really have any underlying collateral, like the FTX AMC token and the BitREX AMC and GameStop tokens? I'm sick of that shit. So I decided to create Lit Exchange. My partners and I have been working on it since September of 2021. We will continue to work on it until we're able to properly get everything set up and roll out a product that makes retail investors proud. I truly feel that we can change the world and make it a better place. I've got children, and I want them to be able to trade in the stock market without getting fucked. That being the case, that being said, I wish you all peace and wealth. Have a great day, everybody. I'm gonna be so goddamn rich.
I think it's time to blow this thing. Get everybody in the stuff together. Okay, 3, 2, 1, let's go.
I'm gonna be fucking rich. I want my fucking money. Griffin, I want my fucking money. Yo, motherfucker. Holy shit, we're gonna be so fucking rich. Damn it, we're gonna be so fucking rich. Griffin, I want my fucking money.
You're an original,
Hey,
aren't
yelling,
you?
cowboy, give me the fucking money. Get the goddamn money printer out.
Great.
Let's get lit, ladies and gentlemen.
Bounty letter.
We're gonna be so fucking rich. Get the goddamn money printer out.